Want to shop Walmart Black Friday deals first? Walmart Plus members get early access to our hottest deals. Join now and get 50% off a one-year annual membership. Shop Black Friday deals first with Walmart Plus. See terms at walmartplus.com.
Hey guys, Akil here. Welcome back to the Trading Coach Podcast. Today, we're going to talk about some big, massive moves that hit the market by surprise and why we need to get used to more of these surprises going forward. Now, before we hop in, if you haven't done so already, make sure you leave the podcast a rating or a review. You can do so while you're listening to it, but it is the best way to support what we're doing here with the Trading Coach Podcast on our journey to becoming the top rated trading podcast out there. So you guys are probably hearing this if you are staying up to date, either Tuesday night or Wednesday. So this is still kind of relative news, right? But Monday evening, right kind of after the shift of the rollover. So Monday around like 6 o'clock, I think it was Eastern time, we saw some massive moves in the currency market, specifically on the dollar Canada. Now, how do I know it was the dollar Canada? Because we did a video a few weeks ago talking about long opportunities on the dollar Canada, and it was something that actually went in our favor of that prediction. But this was not a normal move, right? This was about a 200 pip move very quickly that actually caused the dollar Canada to reach not all-time highs, but I guess all-time highs within the last like 4 years or so. And when I saw this, the first thing I did, as I usually do, is I went to my economic calendar because something had to happen, right? Typically, when it comes to news events, fundamental announcements are scheduled. And you know, kind of with Canada, with the US dollar, with any currency, I guess, matter of fact, you know when their sessions are active and their news is pretty consistent. Like 8:30 is a usual news release. 10 o'clock is a usual news release. Today in about an hour at 2 o'clock, we have the FOMC minutes. That's a usual news release. So when you see a massive move in the market, specifically on the dollar Canada, so it's not like an Asian currency pair or anything like that, you kind of wonder what happened. And the first thought was some type of natural disaster, right? Whenever there's a natural disaster, people flock to the safe haven pair, which is the dollar. That would make sense. But as I looked across other pairs, I said, hey, the dollar really isn't moving against these other ones. It just happens to be this singular pair for the most part, at least the ones in my portfolio. And as I followed my curiosity, right, looked both ways before crossing the street so I didn't get hit, right? I heard what happened to that cat when he went across the street because of curiosity. That didn't want the same fate for me. I discovered that it was due to an announcement from our future president, Donald Trump. And pretty much what he did was on Monday evening, he announced that when he takes office, January 20th, 2025, the first thing he's going to do is sign an executive order imposing a 25% tariff on all goods coming from both Canada and Mexico. He said China as well, but we're going to talk about Canada and Mexico, or at least Canada specifically for this one. There are some other countries that he's considering kind of imposing tariffs on as well. This has kind of been his big threat or negotiating tool. But right now, he left those out. He just talked about Canada, Mexico, and China. And first and foremost, this is a little bit interesting and maybe illegal, right? Because it would violate the terms of, what's the name here? It's, I forgot the name of it, but it's, I think it's called a fair trade agreement or regional fair trade agreement, something like that. But European Union has one, North America has one. Basically, these are treaties that are between Canada, Mexico, the US that establish rules for trading and encouraging trading, the free movement of trade, so goods and services across the border. Pretty much, as I stumbled through that, it's kind of an agreement that says, hey, we can share with each other without like extra tariffs on top. So the reason why this caught my curiosity is because it was a gentle or perhaps harsh reminder that we are about to enter the Trump tweet era 2.0. And I don't specifically mean Trump tweets, but we called it the Trump tweet era the first time Trump was president because he did something that was different than any other president or person in power, significant power, did previously, right? Typically, when a president or a head of a central bank or something like that speaks, they do so at a prepared time. They do so in a prepared statement that is ran through a million public relations people so that it says nothing more than exactly what they want them to say, and it doesn't rub anyone the wrong way. You've seen all these political speeches and stuff where they say a bunch of stuff and it doesn't really mean anything. But that is to kind of keep the sanity in the market. You want to be very direct and very clear with what they're saying, or the fact that they're avoiding saying anything. When Trump was in president the first time, he was the first one to kind of take like a direct to consumer, I guess you could say, type of approach, where he said, hey, I'm not going through anyone. I'm not waiting for a speech. I'm not setting up anything in advance. I'm just going to whip out this keyboard, get my Twitter fingers going, and type something. And this caused the markets to go nuts. It was crazy because I'd never experienced anything like this in my life, where just like yesterday, but on a more consistent basis, we would be randomly scrolling through the charts and having a nice normal day, and markets are doing what markets doing, and boom, everything blows up and you see these big massive spikes and you're like, what happened? What happened? What happened? Like a tsunami? Did something explode? Are we bombing each other? Like what happened? And you dig deep and it's like, yeah, Trump mentioned trade war again in a tweet, and China responded, and it's ridiculous. And to maybe a newer trader, it seems fun because like, oh, it's a lot of action, it's a lot of sparks, it's a lot of wow, big moves, let's capture it. But to a seasoned vet, right, we don't want big, crazy, unexpected moves. We like consistency, right? We are trading based off of patterns that we see in the market, whether they're indicator-based, whether they're price-based, whether they're historical, advanced, classic, whatever you want to call them. We are trading off of patterns in the market, and our edge is based off of these specific patterns having a specific outcome, a specific amount of time or percentage of the time throughout the year. So when you have weird stuff, for lack of a better term, happen in the market, unexpected stuff happen in the market, it kind of throws a monkey wrench into this pattern. It's like a team that is, I remember years ago it was like this, the Philadelphia Union, which is our local soccer team that I support. We were one of the best teams in the league. We were in the MLS playoffs. We were supposed to win. This was during COVID, actually. And then we lost 7 players because one tested positive for COVID, and then the other 5 were, exposed. And this was like minutes before the game. And then all of a sudden, we had like a 13-year-old playing because that's, we just threw some random kid in the uniform. But it's like surprise like that. It kind of throws all of the odds out of your favor. And it brings us back to kind of the gambling references in trading, where it's like, are we trading because we have a statistical edge, or are we just at the roulette table saying red, black, I don't know, right? Or are we just throwing stuff at the wall and hoping it sticks? So I say this as a warning because I see no reason to not expect the same thing when Trump takes office again, right? We look at the past to predict the future, whether it's technically with backtesting and going through historical data, whether it's fundamentally with different recessions and pandemics, right? We've been through 4 years of a Trump era before. We know exactly what happened. Therefore, we need to prepare ourselves on what to expect. And what we should expect is a massive amount of volatility in the market. We should expect wild swings, especially as he's loading up his clip with these tariff threats, right? And either implementing them or using them as threats for other reasons. Because when it comes to tariffs and international exchanges and stuff like that, currencies are the primary market that get affected. They're the primary market that responds to stuff like that. So these swings, if you're a Forex trader, are going to hit home directly. They're going to hit home across the board as well, even in the stock market with very specific with businesses and what they, not to get into a whole stock thing, but I would be looking into businesses and what they import and how much is now going to cost for them to import stuff, and can they still import it with those costs, and prices will rise. We did a whole thing on supply demand in today's Trading Unmasked workshop, but you can see how it all kind of goes together. So to end things off, I guess the question is, well, Akil, you said all this stuff. Well, what do we do about it? And that's an interesting question, because really you can't. right? You can prepare for news. We tell our traders all the time, hey, there are certain news events that the market doesn't care about. There are certain news events that the market will probably move a little bit. And there are certain news events where you need to pack your bags and run and get as far away from your charts as possible. The thing is, usually we can prepare for those. We know that, hey, Tuesday, 2 o'clock, get away from your charts. Or Monday, 8:30, get away from your charts. And you can get away 15 minutes before. You can get out or get back in 15 minutes later. With these specific kind of random tweets that come at 6 o'clock at night, what do you do? Well, I've got two options for you. One, and this is actually what partially influenced me leaving day trading. One was that COVID came, stocks were cheap, and I took my day trading account, cashed it out, and bought a whole bunch of stocks with it because that was kind of the fun account anyway. But one of the reasons that I started getting frustrated with day trading around that time, because Trump was in president from 2017 to 21, I think, was because the odds weren't playing out as much as my favor. So maybe a step is, hey, maybe I leave the lower time frames. Yes, the 200 pip move is still gonna have an influence on higher time frames, but trust me when I say, it's not gonna disrupt a 4-hour chart. It's not gonna disrupt a daily chart as much as it would a 5-minute chart. On those higher time frames, right, you still have a chance. 5, 15, even an hourly, if you're in any type of move, you're done. You're done after that. So one is maybe think about moving your trading, right? Maybe adapting to a higher time frame. That is an adjustment that many traders make anyway as they mature, as they go from less needing action or wanting action to more wanting freedom. So maybe this is something that, boom, kickstart that. Another option, and I'm not saying to do this, but I do want to talk about it. Something that I've observed is this, and we observe this in regular news events, but more so in these Trump tweets. And we're even seeing this today real time as I speak. So the market is driven off of fear, right? Fear and greed, but fear. So what happens is when an unexpected something comes out from Trump, I don't even know what it was, statement comes out from Trump or anything, the market initially reacts to it. This can be a natural disaster as well. And then what happens is over the next 30 minutes, over the next hour, maybe even sometimes the next day, the market has time to think, right? In the workshop this morning, we were talking about decision making and the term sleep on it, where it's if you go to a mall and you see something you like, the first thing you think is I gotta buy it. But how do I know if it's an impulse buy or if I really want to buy it or not? Well, you go home and sleep on it. If you wake up the next day and you still want it, then it's probably something that you truly want to buy. If you forgot about it and you're not worth going back there, then it's probably an impulse buy and you can save some money. News events are the same way, right? Typically, we'll see this massive reaction, all this impulsive action from institutions and from the general public, retail traders, and this causes the market to kind of explode up. But then 30 minutes, hours later, maybe a day later, depending on what the event is, as the market has time to think about it, they realize that, hey, either this was the right move and price continues on its way, or you know what? I overreacted and the market starts to correct itself, right? And I would notice that with a lot of the Trump tweets where we would see a initial reaction because everyone's panicking. You know how it is. If you're in a room with 100 people and 20 people start running, you're probably going to start running too. I know I am. I'll be right in the front, right? And then you realize well, why are we running? And you're I don't know. I just saw John running and 10 of his friends are running, so I started running too. And you're well, were we actually running for a reason? And then some guy comes out and he's nah, just it felt like stretching my legs, idiot. And then we walk back into the room, right? That's that correction. And that's how the market is too. They see a bunch of people doing one thing and they all try to do the same thing after that. But specifically what I've noticed with these Trump tweets is that because they're how do I say this? They're threats, for lack of a better threats, opinions. They're not necessarily factual, meaning that it's not this has happened. It's more of I'm going to do this or I'm going to do this or I don't like that. It's more opinionated, I guess. It doesn't hold as much as kind of an event that showed us that, hey, there's a massive inflation number that just came. So the market panics. It sees everyone else panicking. It panics too, excuse me. And then it realizes that, why are we panicking? And it comes back down. So perhaps you look into implementing a strategy, a counter trend strategy, where you wait for that move to happen. You wait for the point of exhaustion, right? For you guys in the workshop today, we taught you about that, the loss of momentum pattern. And then you look to capture the correction. So counter trend moves, capturing the correction and the retracement from that initial move. Now, again, very important if you have a plan on how to do so. I'm not telling you guys just to go out there and trade news. You know, I am highly against trading news. I think it is the dumbest thing you can do. But especially if you're a seasoned vet trader, that may be something that can give you some pretty good opportunities in the market and allow you a way to take advantage of this, well, high volatility time. So let me know what you guys think. Am I crazy? Does that make sense to you? What do you think about Trump being president and how that's going to affect the markets? Anything. I love reading the comments. So leave a comment below if you're watching this on YouTube or on Spotify. And I appreciate you guys joining. Until next time, plan your trade your plan. Take care.